This is really about being free to create what you want your life to look like. We each are our own hero. And how do we take the challenges that come our way and see those as the birth process of us becoming heroic? Can you meet that judgment that ultimately will surface with neutrality?
This is the Wall Street Coach Podcast with Kim Ann Curtin.
Aloha, this is Kim Ann Curtin. I'm so glad you're here to watch my podcast. Friendly reminder, I want you to go check out traderherojourney.com. That is for you if you are a trader who's ever struggled with fear of missing out, greed, ego issues, anger issues, health issues. If you have been feeling isolated and alone, this is the community for you. This is a different sort of Discord room. It doesn't exist except for on traderherojourney.com. This is to deal with all the psychological baggage that gets kicked up when you're a trader. I hope you'll check it out, and I hope you'll join us. Aloha, everybody. Thank you for watching the Wall Street Coach Podcast. Please welcome Alex Sposito, who is here with me today. I'm very excited to have an opportunity to talk about his journey from college student to becoming a seven-figure trader. Alex and I got to meet at the Traders for a Cause conference, or technically the after karaoke party at the New York hotel. We technically met there, shared some karaoke, but his journey, I think, is fascinating and inspiring. So I'm so happy to have you here. Thank you for coming, Alex.
Thank you very much for having me. And yeah, quite the way to meet. I've seen you through mutual friends and on Twitter, but sure enough, sitting beside me at the piano bar.
Having the opportunity to be with somebody at a karaoke bar in Vegas, I think is a next level of intimacy. And if we can both be friends after that kind of situation, we're probably at a good start. So.
Exactly. I'm right there with you on that. That's incredible.
Nothing too embarrassing for either of us, luckily. So it was a wild ride.
Oh, yeah. It was. Vegas was a lot of fun. It was a very well put together event, and I'm definitely planning on being there again. So hopefully I'll see you at the same piano bar.
Yes, I hope so too. I had a lot of fun that night. I live on a very isolated island, and perhaps you do too. I'm sure Puerto Rico has a little more excitement than the Big Island. But I was like, oh my God, a karaoke bar. I haven't been to this in like 8 years. So I'm very excited.
That's great. What part of the Big Island do you live on?
I'm in Waimea, actually.
Okay.
Well, it's sort of up country from Kona and about an hour from Hilo. So we're kind of smack dab in the middle. Do you know the Big Island? Do you know the Big Island?
I went last May, and Terry June, my wife, has a family friend, and she lives, I believe, is it the Ritz-Carlton or the Four Seasons? She lives at the Four Seasons.
Yes,
yeah.
Kuala.
Yeah, and it was beautiful. It was really, really beautiful.
Yeah, that's about 40 minutes from me.
That's awesome.
Yeah, we'll have to find out more about that because I'm down there quite often. So that's amazing.
Oh, awesome. Yeah, that's great. That's because it was cool. It was a really cool experience seeing all the volcanic rock and then how the island completely kind of changes in different parts. It's interesting.
Constantly is growing. And I think it's a great metaphor for like rebirth and death, right? Because there's destruction and yet rebirth all the time happening here. So speaking of which, you have had your own kind of journey over these past 3 or 4 years. And to just give you guys some context, he started trading back 2014, 2015. Is that correct?
That is correct. Yeah. 2014, 2015. Kind of just was a transferred freshman and was pretty lonely looking for a hobby. I was 20 years old at the time, dorming with a bunch of 18-year-olds. I didn't really know anyone. And my dad actually suggested I look into stock trading. And I found, Tim Sykes, and was with Tim Sykes for like a year and a half. And then from there transitioned to Investors Underground. And, I'm still part of that chat room today.
Yeah, I think you're one of the moderators, one of the people who helps advise and gives input to the other traders that are in Investors Underground.
Yeah, I used to be a lot more active. I'd say back in the day, the past, I want to say like 2-3 years, I've kind of dialed back from the activity. But nonetheless, I'm still lurking nowadays.
Good.
Just don't post as much as I used to.
Sometimes there's just seasons, especially when life gets busy. You recently got married. Congratulations on that.
Thank you very much. Yeah, it's nice. It was beautiful. It was everything I was hoping for, but it's also really exciting to kind of start the next chapter of life and have that, behind us, and honestly just focus on work.
Yeah.
I feel like part of my journey right now, like the exponential growth is right around the corner, and it's kind of nice to have everything in life kind of behind me to where I can just kind of focus on that for now.
Yeah, for sure. And I'm curious, just for yourself, what do you feel were the strengths or attributes, to become a seven-figure trader is, I think, a dream of many traders who are beginners. The attributes that you feel got you there in really a very, relatively short amount of time?
Yeah, I mean, at first it was definitely a little bit of luck, but risk management is definitely the most important attribute. I mean, having an appetite for risk, not a lot of people can just kind of be okay with losing money and losing a lot, a lot of money over the period of time. I'd have to say risk management is probably the best attribute. And I learned the hard way. I had my first year trading, super lucky, turned 25,000 to 225, 250,000. And then I lost it all on one trade, shorting a stock. So, that I took like 2 months off trading after that. I was like depressed and kind of wondering like what happened, like how was I so wrong? And it was actually my dad who told me to kind of get back on the saddle, give it another chance. But that made me kind of reflect on and notice that there were a lot of times where I was wrong on a stock and I'd keep adding and it would turn in my favor. And I simply just got lucky that, a 20, 30,000 trade would result from that when it really could have been a monstrous loss like the one I experienced on an oil company Ren back then.
Wow. So what I'm hearing is that often somebody can just be lucky.
Yeah. I think luck is definitely a part of it, whether it's meeting the right people who kind of introduce you to stuff. I think in terms of another attribute, I think networking is probably one of the best, attributes. I always believed that day trading, I didn't think I would talk to anyone. I thought it was something I did at home alone. And to think that people I've met in chat rooms and, are some of my best friends to date, and, people I talk to every single day. Like I never in a million years when I first was starting up thought that it was such a social thing. I thought it was always just kind of an introverted, just me in front of my screens. I didn't realize how social it could be and how big of a factor networking would kind of impact my life.
Did the networking begin relatively soon after you started? How far in were you when you started to make those connections?
I would say it was probably 2016, 17. So I didn't, when I was first originally in Tim Sykes' room, I didn't really network much. I remember I may have messaged like Tim Grattani a few times back then, Tim a few times, but that was really just, I was just alone doing my own thing. But then when I switched to Investors Underground and I found myself kind of reaching out to Nate, Eric, and some of the other guys in the chat room, the moderators at the time, and it was awesome getting responses. So then Eric and I actually bonded over my biggest loss, Ren, because he was also in the stock at the time, and that kind of created a little bond because we chatted about it and kind of trying to reflect on where I went wrong and all that. And that's really where I started building relationships. And then as I started performing better and having good calls, Nate kind of took notice, and Nate became super friendly and reaching out more. And it just kind of was a slow snowball effect where then all of a sudden it was invited to a Discord room. The Discord room had, some idols I looked up to, and then, they introduced me to people, and it kind of was just like a snowball effect.
Amazing. I think, do you feel that traders that don't utilize the social aspect perhaps sabotage the amount of time it takes? Because what I'm hearing with your story is that those connections, even the empathy you received over your loss possibly allowed you to process through that loss quicker.
Yeah, I think one of the best things is definitely the support system. So I've had nothing but support from my wife and my parents to where like, it's not every day that, I think that, you could lose 225,000 on a trade. Then, your dad tell you to kind of keep going after and not just say, hey, yeah, I think you should stop. If he would have said that, I probably never would have got back into it, would have been looking for other jobs. So being able to, at the end of the day, whether, it's a bad loss or a very nice win, it is nice to have that support system and know that, trading is our job, but like you want to identify as more than just a trader. I think if you only identify it as a trader, that, when you go through a losing streak or, it just, I think you're emotionally, it'll kind of just crumble you. I think you need everyone needs to realize that they are more than just a trader and, just it's a job and, you're going to perform very well some days, you're going to underperform other days. And I think that helps you kind of detach too. But it's easier said than done, and having that, good support system that you can escape to, when you're away from the market, doing things you enjoy, that makes it way easier than if you're just kind of alone and you're just putting, nothing, every day, all day is into stocks and you have no other escape from stocks. You're not doing well. That could definitely like negatively impact you for sure.
Yeah. Do you feel that you've come from a place where, how did you not allow yourself to just collapse your whole identity with being a trader?
That's a tough question. It's a very tough question. I'm not so sure. I think, yeah, I really don't know. Because trading is a huge part of my life and I am a trader, but it is, I don't actually, that's a phenomenal question that I'm not too sure about.
Okay. I suspect based on, I watched that terrific conversation you had with Anthony Nito on Investors Underground. And that was what I walked away with. I really heard your discipline, your dedication to this craft. And yet you seem to have this ability to hold it at an appropriate arm's length distance from your own identity, which I think is really rare.
Yeah, I appreciate that. It definitely took time. Like it took, and I want to say like becoming systemic or systematic and has really allowed me to free up a lot of time and dedicate my focus elsewhere because, back when I was scalping and just kind of, at my computers constantly looking for that next play or when I was in a trade and, I didn't really have everything like mapped out where, I had an idea where my stop would be. I never really knew where the right place to get out was for targets to take profits like that. Like, so I'd be constantly just glued to, each tick and wouldn't really focus if I was in a stock, even, I couldn't leave for like 5 minutes without my phone being up with E-Trade. But, ever since really becoming systemic and having everything defined, like it's allowed me to where, if I get in a trade, I'll go to the gym where I don't have service for 2 hours, but because like I know I do have a stop loss in, and it's allowed me to be more present with like in pretty much every aspect, and I'm not gonna say like I definitely wasn't like that from the start. I was all in watching videos 12 hours a day, like just and so I don't think it's something you can start by doing, but I think it's something that eventually it will evolve to, I believe.
Yeah. Are there things that you look back at those, the first 2 to 3 years that you would, if you could go back to that version of yourself, what would be the top 3 things you would say, pay attention to these 3 things?
Well, it would definitely have probably focused on risk management because I didn't have the best. I definitely got away with a lot of like lucky situations that could have taken me out way before the big loss did. That would be 1. 2, I would want to actually look more into the data and statistics side because I didn't look into that at all until really 2020. And then 3 would be really defining strategies more and doing probably more reviews early. I would, I noticed pattern recognition, but I didn't do enough like defining. Like I knew like, oh, I've seen this setup before, but then you tell me to tell you 10 ticker symbols of that setup, and I'd draw a blank. I don't know, I just saw it. You know what I mean? So I would kind of be more detailed and strategic like that way. I would definitely define like what is really my strategy. I look back and I think about it. It's like, it wasn't all luck because I was seeing stuff and I was consistently making money, but at the same time, I couldn't teach it to anyone. It was just something I saw, and it's like, I'm not saying you need to be able to teach it to everyone, but I feel like you should kind of be able to teach what you do to some people, because then that means, you have things defined, you have a system, and like for me and my business partner, we have a Word document where we have like 100 scans on trade ideas, and we have a Word document that says, basically, if it's on this scan, we have various entries, we have targets, we have just so many parameters that pretty much you could pass on to anyone. And it would take a while for them to learn the terminology and kind of understand the concepts of it. But once they understood that, you could let them go at it.
Isn't that a famous saying? What they say, if you really want to know if you understand something, can you articulate it briefly to somebody else?
Yeah. And there's no way back in the day I would have been able to like articulate to anyone. It was just one of those things where it's like, I don't know, man. I just see it, and it makes sense real time, and it was working out. So, but that's why I decided to shift, because so it's more like of the mindset of should versus could, because technically in the market anything can happen, but it's a very important decision, like what should happen.
Talk about the difference between those. Such a beautiful point to focus on.
Yeah, well, we'll use the recent runner, CXAI, right? Like, so that was a stock I was very interested in, and
this is April 19th, 2023. If anybody to go check it out.
So like CXAI, so say you're buying that stock, right? And it could go to 70, like it could go to 70, and it did, but why should it? Was there anything pointing to like why this should go there? Like, I'm not going to say no. I'm going to say no. Like there's nothing that says should go to 70, but it did, because anything in trading can happen. Now, we talk about the reversal, and, I didn't play this one, so it wasn't actually part of my business plan. We were hoping for a push up when it opened that day. We were hoping for a push up and it would have gone on a scam, but sure enough, it reverses back to a mean that we use, and then now it's bouncing today. That's like should happen, because, it gave a trigger we look at. Now, it didn't get on a scan, which like really frustrates me, because it would have been nice to capture, but it gave a trigger that we know it just wasn't on a scan, so we didn't put capital at work, and it went to the target that it should go to. And that's just really the difference versus saying, I'll just short some here at 22 or 20. I'll short some here at 20 because this could go back to 10. And like, sure, it worked, it worked, but the major difference between could and should is conviction. When you know something should happen, you have so much more conviction than when something can happen. Like, I remember all the time, like being like scalping, I'd be so annoyed because I'd take 20, 30 cents and the stock would go down $2, $3. So I'd be like, oh man, like brutal. But where does that stem from? It's because at the end of the day, I knew it could happen, but I didn't know it should happen. So I wanted to lock in the quick gains, because it also could have went back up. There wasn't that conviction.
Yeah, totally. So conviction, do you suspect it happens for each trader at different point as they begin?
Yeah, I mean, absolutely. It's many traders, talk about A plus, but don't actually know what their A plus truly is. I mean, I would have told you about my A plus, because I could, I would see it, but I wouldn't be able to like have any data to back up what I'm saying, or, I wasn't very nuanced. I was like, I knew the pattern, I knew what made an A plus, to the eyes, but it was honestly kind of just fake, because there was no statistics, or I had no, a lot of evidence or charts replicating the move. I didn't, or even data of similar stocks, because, stocks with, similar floats doing the same move, and going back through those and be like, yeah, this is an A plus move, because, if we pull up this stock, this stock, this stock, this stock, this stock, they all give phenomenal reversals. They all give this kind of trade. Like so back then it was kind of just lacking. I just lacked so much nuance and just, details. I just didn't do that because I was scalping a lot of the names and I was making good money doing so that, I didn't really kind of get into the nitty gritty stuff that I now transferred to because I think for longevity, it's kind of a must.
After that big loss, what did you do for yourself emotionally? Because, of course, I really care about the emotional side of this process. How did you process the anger, the grief? How did you work your way through all that?
Oh man, I don't know. I definitely cried a bunch. I cried because it was like a double whammy. And like the thing was, I failed my spring semester of classes because I was trading full time and I was making such good money that I could pay for my pretty much all my tuition. So I was gonna surprise my parents with that. But I doctored all my grades in the spring and showed them like B's. So they thought like things were going well, and then they had no clue, how well I was doing trading. And I'm thinking in my mind, like, it doesn't matter because I could just pay for my college. Like they'll get over it. And then comes August, September of the fall, and I'm so close to like the 250,000 mark. I'm probably 240 something, and I am just like when I hit 250, I said I'm gonna tell him, and I'm gonna give my dad, like 200,000. I'll keep 50,000, and I'll trade, and that was that. That was the game plan. And then when I lost all of it and like went back down to like 24,000, I was just like, what did I do? I said everything I just did, my whole reason for failing last semester, like out the window. So then not only did like I have the loss, I had the realization of like they're gonna kill me for failing my classes. So then I devised a plan actually. So I was like super upset about trade. I devised a plan to try and make the baseball team because if I could make the Auburn baseball team, then I could get another year of eligibility. So they wouldn't think anything of it. I would just be on the baseball team and I could make up all those classes. So I had an elaborate scheme. I had a whole scheme in place. And so I trained for like 2 months to make the baseball team. I didn't trade. I said like, kind of like to heck with that. And then trained really hard for 2 months with a lot of the baseball players to make the baseball team. I had an incredible tryout. Everyone was congratulating me because they thought I was going to make the team. And they actually took my best friend because they only had one spot. And and then it was just, well, that was like the ace in my pocket. So I was like, all right, well, this sucks. And I had to come clean. And I will say, like, it's funny how like everything like in life happens for a reason. Like, if I do make the baseball team, I probably never go back to trading and I'm not here today.
Wow.
And actually, if I don't fail that semester, like that semester of class, I don't stay at Auburn long enough to actually meet my now wife. So yeah, so it had like a ripple effect, but basically I had this like heavy weight on me. And then, once I came clean and obviously I got the, I'm not mad, I'm just disappointed. Yeah, talk,
The worst. The worst.
oh, the worst. But it was,
Just don't be disappointed.
yeah, but it was like, the biggest weight off my shoulders and chest. And like, it felt so freeing. And then, shortly after that, my dad was like, hey, I think you need to get back training again. And, that support kind of helped me. But yeah, honestly, like I definitely cried for a while, was depressed. But then like, I think the realization of having to come clean, that kind of was like, that took over from the loss, more than the loss, because nothing was scarier than having to tell my parents that. Like I was like, oh man, my mom is gonna murder me. But yeah, so that's how everything went down.
I love your strategic mind, though. The elaborateness of the plan to get out of jail.
Oh yeah, it was.
You got it, and that's clearly showing up in your trading. That strategic mind.
It was something. Like I said, I'm very, very, very happy that it ended up failing because it was like for the best for sure.
Yeah,
but
that's fascinating. I love that you pointed that out. That so much of our life, when we look back, that those difficulties somehow are creating things like you being there to meet your wife. You wouldn't have probably been trading. Like, it's just fascinating to me that those golden kind of results come from pain. And
yeah, Yeah. And it's just like every decision that it made me kind of realize, 2 years later, 3 years later, that's like these decisions that you kind of think are like micro decisions or stuff, like they really kind of alter and can change the direction of your whole life. And it's something as like, a kid when you're 18, 19, 20, like you're not thinking about it. You're kind of living day by day, you're making decisions and you actually don't realize, the trajectory or path it's actually putting you on and all that. So it's, it's definitely, it's interesting because it's not how I ever thought or, used to think. And it's something that it really is important.
Yeah. Yeah. That's a beautiful movie called Happenstance, which allows you to see these small moments of what you think is really not essential and the ripple effect all those moments have later on. You get to just watch those small moments unfold. And that's what it sounds like about what you journeyed through. So we're going to hop over to Twitter Space now for part 2 and continue this conversation. I have pages of questions for you, but we'll try to get to them. This is such a great conversation, and I'm so grateful you're here.
Thank you. Thank you so much. I'm booting up Twitter right now.
Okay, perfect. Aloha, everybody. I am Wall Street coach Kim Ann Curtin. I host this Twitter Space, which turns into a podcast. I guide a select group of traders and entrepreneurs to help them define and secure success with less pain. I'm also the host of a Discord room called TraderHeroJourney.com. I'm so excited to have Alex Sposito here with us today. Alex and I just came off of a Zoom video call, which will be part 1 of this podcast, which will release in about a week to 2 weeks. So we were just talking a little bit about major loss that you had quite a while ago. And I was asking you just about how you recovered from it emotionally. And I'm just curious, what you said you cried a lot before in the part 1 of this conversation. What else was it that helped you move through the doubt, the frustration, and to find yourself? How long did it take you till you could come back into trading?
It took 2 months, and that was because of the elaborate plan I had. So I not tell my parents that I failed the spring semester of school. So it took 2 months, and it was a good to clear my head. I think really just having a good support system to get me back on the horse. Like I knew at the time that it wasn't all luck. There was something to it, and really just having my dad tell me, hey, get back on the horse. You got this. Like you can do this. That kind of just reconfirmed, really helped me get back into it. And then from there, I just really worked on my risk management and kind of just slowly chipped away again. Didn't try to go for home runs, just kept hitting the singles.
Was the support, I'm really hearing how incredible your parents were, especially in light of, the courses that you took at college. And those grades were not what they were expecting. So talk a little bit about the support group, though, beyond your parents. I think it's remarkable. And just a shout out to both of them for having your back in what could have been easily than not having your back. That's just really says a lot about them.
Yeah, no, it absolutely. At the time, it was really just them. I was just getting started. I was just starting to chat to, with Eric, and Eric was obviously very, very understanding and just kind of, say, hey, man, it's happened to him a ton before. It don't get down. It happens to everybody.
This is Eric who?
Eric Wood.
And what was it that he was trying to kind of enroll you to say?
He just, was just kind of just letting me see that, it literally happens. It happens to everyone or most people, even, a lot of the best traders I know today, they have a blow up story of themselves. So, it was the first one, and, you think it's the end of the world at the time, but, he kind of just helped me see that, the best of traders, early on, especially early on, have blown up and look at where they are now. It's a very long, a big picture thing, and just worrying about one blow up, when I was fortunate enough to still be in the game, it's kind of just a bump in the road. It's not the end of the world.
Why don't you talk a little bit about your trading strategy and the kind of trader you are. Just share some context about all that if you would.
Yeah. So, I mean, in 2019, before I was kind of shorting parabolic stocks and trying to find tops and stuff. And often, if I was in a trade, you'd find me like throwing my shirt off and sweating, heart rate probably at 160, like yelling at the computer monitor, like, let's go, come on, like fail. And then, nowadays, now that it's all pretty just systematic, it's very boring. Trading's super boring. That's actually something I wrote down like 2 weeks ago that I have to actually be careful with, because there was one stock and I gave a trigger for my scan and I could only get 800 shares to locate. And I actually didn't take the trade because I was like, this is, it's a waste of my time. And I realized like that was a terrible mindset to have. It's simple as just, at least I had shares, and sure, the P&L is not going to be anything, but it's more just, well, the system says it's going to work. So, regardless of the shares, I should have taken the trade anyway. So like I said to you on part one, I'm really just trying to kind of focus on my emotions more and how I feel during these trades, because I don't want to let boredom or, thinking that, only having, an insignificant amount of shares on a stock, like that shouldn't affect my decision whether I get in or not. It's simply as like my business plan says to get in, even if I have 10 shares, like I should just get in because the business plan says I should. I should get out where it says, because it's not about the P&L. It's about what the business plan says.
Do you feel that your strategy has changed significantly since you began in lots of different ways? Or is it just now this very, like you speak about the systematicness of your plan? Is that something that... No,
it is, like 180% or 180-degree turn from 2020. So I want to say 2021 is when I really made the like 100% switch to where I have really stopped taking discretionary trades and all of that good stuff. Like even now, like I kind of still want to experiment with the long bias stuff, and I've taken a few long bias trades, because I only, I'm pretty much like 95% short bias. And even now I've taken a few discretionary trades, Tesla in December, Alibaba in February, and AI just the other week. And I've lost collected 125,000 on those 3 trades. And it's just like, I'd rather just collect the data and back test it and come up with a strategy versus just taking these discretionary trades. I find it to be, a little bit, because it's should versus could. I look at the chart, I'm like, Tesla, it got hammered in December. I'm like, man, this could bounce, and trying to find a bottom, and it just pretty much do that 3 times in a row. And it's like, take the hint that clearly this is not working. And I'd rather just back test the strategies and then kind of define everything and go back to that. It's more just kind of robotic that way. And I just kind of prefer it.
If anybody here, aloha Sam, we have 2 Sams today. If anybody here has any question, please just raise your hand and I'll let you jump right in to ask Alex any questions you may have. One of the questions I had, Alex, was, what do you feel traders underestimate about this journey in those first 3 to 5 years?
Well, I guess nowadays it's just easiness. I mean, it's everyone kind of on social media, any form of social media kind of flashes all the, the Lamborghinis and all that. And I know it's how you get clicks, it's how you get people, but it just, I think people don't have a realistic expectation of like how hard it is. And yeah, that's pretty much the biggest thing, like you can't just show up and, trade on a laptop from anywhere. And like, you can't do that until you have all your systems up and running and established, and, you kind of have everything, especially in, the beginning years. I think that's kind of shown so much. And I think people just kind of get into it expecting it to be like that.
You spoke a bit on Investors Underground conversation with Anthony was such a great interview where there's time where you just don't trade at all. And the discipline that takes. I'm curious, it feels like what you said in this conversation and one we just had, that for you, it's almost not even that discipline isn't even required anymore because you're so committed to what your strategy is. So just talk about like, how does one go from having to be disciplined about not trading to the point where it doesn't even feel like discipline anymore? It just feels like that's how you stay true to your strategy.
It takes, well, it's like anything in life, any temptation in life, when it's in front of you, it's harder to resist that temptation. So, for instance, I don't log in and look for stocks moving anymore. I don't do it. It's just seeing kind of stocks move. You're just, if you watch it all day, you start kind of thinking, oh, maybe I have to make a little bit of money here if I just get in for a quick scalp or something. So like the key, like definitely try to avoid watching stocks intraday if they're not on my scans in the morning, or if they don't come up on trade ideas intraday, or at the end of the day, like I'm just avoiding any momentum names because the itch is always there. That's one. Two is, it took a full year of like, it was a slow. It wasn't like I shut it off for a little, and then I realized I was missing opportunities that discretionary I would have caught, and that was kind of irritating me. But all that meant is just more work needed to be put in to capture more moves, and just had to keep building more and more scans and collecting more and more data and capturing more and more moves. And now that's gone because, we're not catching every play. You'll never catch every single play, but I feel like we're catching most of the most important ones. That's another thing. And then the biggest thing for me was just not sitting in front of the screens, looking at the momentum names. Because, when you do that, maybe early on, you want to do that to watch price action and, kind of learn stuff. But for me in my journey, that's just kind of a negative thing. It's like, I don't like buy snacks to have in my pantry because I eat them all. Like, so I probably open up my pantry like 10 times a day and there's nothing in there. And like, but the matter of fact is if there was like, so be like, oh, you have good self-control. You don't snack. It's like, no, I don't, I try to kind of mold my environment to, so I'm not put in that spot to where I will, I can snack. That makes sense.
Yeah. Yeah. It's the temptation about being proactive about the inevitable temptation is what I'm hearing.
Yeah. And it's a constant battle. I mean, it's easier when you're further along in your journey and let's say you've made a lot of money and, you don't necessarily need trading to live anymore, and you can happily live without, like, let's say trading for a year or more. That gives you the capability to also be more patient and wait for the best plays. When you're just starting out and you have a small account, it's hard to do that. It's hard to be patient because, first of all, you don't even really know how to identify an A+. So when that does come, you're not fully capitalizing. So you're not making up for a lot of, let's just say, C and B trades where, if you're making 500 here and here, then the A+ comes, you make 1,500. Whereas like, you just stop taking all the trades, the A+ comes, you make 40 to 50,000. That makes your whole month or quarter. It's a big difference.
Do you feel that you could just summarize for us these best practices, the ones you've mentioned, others that come to you that traders who are experienced want to kind of always check in on themselves? Like, am I following these best practices?
Yeah. I mean, it's constant inward looking and refinement. And I really like neglected like the emotional side for a long time. And, like getting up and like just my heart rate being 150 plus and having to throw off layers of clothes. I'm sweating. Like even though that's exciting, thrilling, and fun, it's not the healthy thing. It's not what, like, trading should be very boring. The allure of it is it's very exciting. And if it's super exciting, it's because you're probably gambling versus having like a statistical edge and knowing that you're putting capital at risk because the stats are in your favor, or XYZ is in your favor, versus just kind of gambling.
Did you notice this about your heart rate early on? And it's, having to, pull up your shirt because you're sweating because you're so hopped up? Is that something you saw right at the beginning and thought perhaps that's appropriate? And we can see that.
Literally from the first trade when I was risking $10 a trade, like literally only risking $10. And,
Wow.
and I like my heart rate would be through the roof. Like it was the only thing I could hear because it was just like, it was just like a thrill. I thought like, that's kind of what it is. It's supposed to be super exciting and like you're in this name that's moving so quickly. And it's just like, it's just crazy. Like you're so nervous. You don't know really what's going to happen. And so like that literally from the first trade I ever placed, that's like what trading was. And at the time, that's kind of like what I knew for so long until, I made changes and realized that like, it's just not how it's supposed to be.
How long was it before those changes got made? How long did you endure that heart rate going up?
It was definitely like after I took the blow up loss. Like I definitely went a full year thinking that was normal, and it was due to many factors. At first it was just because of I was placing my first trade and like just the fact of like risking money, was like so like nerve wracking that like that was the initial one, and then it became where I think I'm right. So it really was just because a lack of acceptance of risk or the amount I was risking was kind of an exciting or dangerous amount to where it made me nervous. I think like that's where a lot of the, the heart rate and excitement came from, was that it was not really a true acceptance of risk. So that's definitely what got like my heart rate and stuff going.
I'm just kind of curious, what does one do? Do you find that ever happens today for yourself?
No, that hasn't happened in a long, long time. The last time that happened, I was short GME in like when it went to 500. And that was because I risked like the most. It was my biggest trade ever. And I risked the most I ever risked on a single trade on that one because I was so certain I was right. And it got so close to stopping me out. And I risked probably 50 times more than I'd ever risked on a single trade.
Wow.
At that time. And but I was so certain I was right. And it was that day they announced that they weren't going to like allow any more call buying. You can only sell the calls and all that. So it opened up in like the 200s and then it just went straight up from there. And I was just adding until I was out of buying power. And, then it rolled over and I was fired up. So that was probably 2 years ago, maybe. So that was the last I experienced that.
What would you say to traders who are perhaps listening or will be listening, who are like, he hasn't been unhooked up in 2 years? How do I do that? What would you say to them?
It's going to take a little bit of internal reflection, just so trying to pinpoint what is it that is exciting you or firing you up. Is it how much you're risking? I feel like if you're truly comfortable with how much you're risking, then that's probably a lot of people's fix. That's one of them. Second is, I would try and pinpoint what it is that's exciting you so much. Is it the unknown of whether you're right or wrong? Because whatever it is probably a negative impact. Like I said, maybe like on that GME, I knew the stats behind the trade and I decided to just really go for it. So I think that was like better. Like if I would have lost that trade though, I definitely would have been incredibly pissed off and like incredibly pissed off because how much I was risking at the time was reckless. But in my mind, there was no way I was wrong. And I wanted to kind of have a career trade. So there was definitely some flawed thinking in that one because no matter what, when you lose, you have to have acceptance. And, with that trade, I knew that I was probably going to lose 7 figures if I was wrong. And I told myself it was okay. But then when you're down like $900,000 And then you're just like, what the heck am I doing? Like, am I really cool with this? Like there's no way. Like I would have been so pissed off. So
Yeah.
I think you have to be really honest with yourself and like, because anything like really can happen in trading, even if you have a 99.9% win rate on a certain strategy, there's that 0.01 will eventually happen. And, hopefully you have many, many winners before that happens, but it could happen early on. So you can't just risk your whole account.
This is a conversation with Alex Sposito. He is a former college student who turned into a seven-figure trader. He and I just did a Zoom video, part one of this, what will be a podcast on the Wall Street Coach, which is my podcast name. I host a Discord room called TraderHeroJourney.com that I'd love you guys to check out. It's the emotional side and the psychological side of trading. And we give you guys lots of support to navigate that. Some of what you just said, Alex, about the emotional side and your, willingness to be self-aware. What do you attribute that to? And how do you continue to stay self-aware? What are some practices or best kind of things you do for yourself to just constantly check in that you are being as kind of awake and aware as you need to be?
I just recently started kind of journaling again, and with the sole purpose of of focusing and taking note of how I feel in trades. That was just, a good buddy of mine that I met out here in Puerto Rico. He thought that was incredibly important, and it was something that, I never really have done. I kind of like, I guess, probably like most guys, it's like, oh, dude, I'm really going to think about my emotions. Like, no way. Like, that's just, I feel like it's very counterintuitive to how a lot of guys think. So it's definitely something newer and different, but I think it'll keep you honest. And I think, so far, like I said, I noticed the boredom aspect or kind of aspect of thinking about kind of a waste of my time because I'm not gonna, the P&L is basically irrelevant. And just thinking about that, being more aware about that, like those are not good things I should be thinking about. Like even like one to exit a trade just because it's going sideways all day and like it's boring. It doesn't matter if it's boring. Like, is it going to see my stop or is it going to see my target? Because at the end of the day, whether it does is important to the data, and the business plan says it should see the target regardless if it's just going to go sideways and play catch up to the moving average. So it's kind of, I'm trying to take more note of it and be conscious about it because it's something that I think that people don't realize that it plays a bigger part than you'd think.
Well, I can't agree more with that because I just see it all the time as the invisible driver for so many traders and those that don't seemingly reflect on that. It's almost like, they're missing the ability to have an edge. And I'm like, you all should have as much edge as possible. Please let me know if you guys have any questions for Alex. I'd really love this to be interactive. This is part two. A podcast that the first part is a video podcast we just recorded before this Twitter space. If you guys have a question, just click the button and I'll open up your mic so you can ask Alex yourself. What do you do to decompress and to not be bored? What are some of the things that you do outside of trading that really serve your trading in the long run?
I started working out more again and going out for midday, like 3 to 6 mile walk runs. I started playing tennis with some buddies out here at night. In the evenings, I'll play pickup basketball. So I kind of just have been actually a lot more active than I've been in the past few years and trying to get outside more and not just stay inside because I always kind of tended to be in a routine where I'm at the desk all day and then I hop in the car and I drive to the gym and then I'm inside at the gym all day. And then I come back, so I'm not really getting outdoors as much. So I've been trying to get outdoors a lot more.
Does that change? Do you see an impact on your trading? Being just outdoors and more physically active?
I mean, I don't know about an impact on my trading, but like just definitely more of an impact on my physical energy and how I feel. So I guess, I mean, it probably subconsciously improves it. But like today, for instance, I did like 2 hours. I probably went through like 150 charts. I was super burnt out. So I just went outside for an hour and went on, like a 4 mile, 3 mile, just walk and just got some sun. And then I came back. I felt way more kind of energetic, and I wasn't as lethargic as I was. So it's just something that's kind of been boosting, I'd say, my energy and focus. So it's allowing me to be more productive when I am working.
So you're paying attention to how, what I say is like our vehicle, right? Our physical, emotional, our eyes, like all of the different aspects. After looking through 150 charts, it sounds to me like you're really paying attention to just your energy levels, never mind anything else.
Yeah, I've been really big on that in the past, I'd say 6, 7 months, is being more active, healthier, and just kind of getting back into shape, we'll say, and kind of doing things to kind of be competitive elsewhere and just get away from the screens, because so many hours on the screen. I'm trying to do stuff that gets me outdoors and kind of just gives me kind of a reset.
Yep, totally. All right. Well, I'm not seeing any questions here. So I have one question before we end this Twitter space. If you guys like this conversation, please retweet it out there in case anybody wants to come in to ask a question. Again, if you change your mind, you do want to ask Alex a question, just raise your hand. This will come out in roughly a week to 2 weeks on the Wall Street Coach podcast. I'm just curious. You talked a little bit about how you budget for the times where you can't trade or the times where you're not going to have success. Talk a little bit about how important budgeting is to that kind of equanimity. It seems like you're able to hold over long periods of time.
Yeah, it is everything, like budgeting and living below your means. And, I can't say I've always done the best job. It's definitely something I would like tell every young kid, especially if they're making a ton of money and early on in their career. Like, I do have a good buddy who did incredibly well during COVID, and, he kind of spent his money on really nice cars and material goods. And then the market he just got absolutely smoked in 21 and 22. And now he's looking to sell the cars and he's looking to get a job elsewhere. That's not stock trading. It's sad, because number one thing I think takes people out and why people don't succeed in trading is because they just can't afford to stay in the game long enough to truly figure it out. I mean, rightfully so. It's hard to go a year or 2, 3 years not being profitable, or even, just being break even, like just giving that time away and not making money for a living. Like, most people can't just do that. So budgeting and not feeling pressured to trade to make money is really, really, really important, because it takes a lot of stress off you. It allows you to wait for the best trades and not feel like you need to be looking for the next opportunity versus letting the next opportunity come to you.
So glad you spoke about that, Alex. Bram, the mic is yours. What's your question for Alex? Thanks for being here. Bram, you have to unmute yourself on the mic, bottom left.
Can you hear me now?
Yes, sir.
Awesome. Hey, Alex, congrats on the wedding, man.
Thank you. I appreciate it, man.
Yeah, buddy. So does backtesting using the last 4 or 5 years of data kind of prove to be difficult, because it seems like every year has been so drastically different one to the next? Or do stocks just move the way stocks move? And if you're finding it too hard to find an edge or a system, then you're doing it wrong.
That's very interesting. So actually, we have data from 2018 on, and the 2018, 2019, 2020, and parts of 2021 data are very similar in the fact that the way we were measuring extensions back then and stuff had a lot to do with 52-week highs, all-time highs, and stocks they weren't at their lows. So 2021 and 2022 were really, 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 it was a huge dry spell, because we needed to figure out different ways to measure extension, because there still were plays, but we never had to kind of expand how we were looking at extension. So it really, it expanded our playbook immensely, and it actually like added like a ton of scans. But I mean, yeah, so 2021, 2022 were beyond slow, and it's finally starting to heat back up again now. But the data definitely, and how it's not so that the data is different, it's just how you measure extensions becomes different, because you have to think outside the box, and you have to find different ways to find like what filters on trade ideas are pointing to that extension. But in terms of the movement of the stocks, I'm finding that, I mean, they're all the same. The traders that are working now worked in 2018, 19, worked in 2020, 21. So like on the execution side, how stocks move, I'm finding that to be completely the same. Just finding different measurement styles to capture the A+ was more difficult.
Very interesting. Thank you for that, man.
You're welcome, man.
If anybody else has a question before we wrap up the Twitter space, please raise your hand now, put your request in. Be sure to follow Alex here on Twitter. His interview with me, this is part 2, and part 1 is a Zoom video interview, will come out in about 2 weeks. Also, there's a terrific interview already up, Alex, up on Investors Underground YouTube channel. And it's just a really great conversation with Anthony, who asked some really terrific questions of you, Alex. Anything else that you just want to say, just as parting words to perhaps encourage the traders that are listening here and will listen later about the journey of being a trader that you feel you've learned through lots of cost and pain and suffering?
I would just give everyone, to stay optimistic, keep moving forward. I find like on this year is actually, to date, I've made like the least amount of money than I have in the past, since I've started. It's been, and now that was part of kind of planning the wedding and not being around to capitalize on a few opportunities. I was on the honeymoon when all the bank stocks tanked, and that was like, those were good enough trades to make your year. AI in February, I was short, and then I got on a plane to fly back to Alabama, and I couldn't add or anything after they released good news. It spiked pre-market by 27, 28. And I would have just been adding immensely, which probably would have made like at least the first quarter a massive quarter. So I'd kind of just tell everyone that, if you're not absolutely killing it right now, like it's not the end of the world. More opportunities will come. I mean, it may get slow again if we make new lows in the SPY, but I would just kind of urge, reduce spending and just kind of stay patient for those opportunities, because they will come, and then when they do come, be prepared to outperform, because sometimes, you do miss the A+, even if you are prepared, outside life kind of has plans for you too. So I'll just kind of try and stay positive where you can.
Awesome. Thank you so much, Alex, for this conversation. You have such a stoic temperament. It's very inspiring how even-keeled you are. And even in a karaoke bar, which is where I had the good fortune to meet Alex in Las Vegas, you were having fun. But again, you just have this kind of like stoic Buddha-like quality about you. It's really quite something. So well done, man. Well done.
I appreciate it. Thank you for having me on. And I look forward to seeing you in Vegas again this year.
Me too. All right, everybody. Thanks for listening. Keep an ear out in the next 2 weeks. We'll have this full episode up on the WallStreetCoachPodcast.com, and take a look at TraderHeroJourney.com, my new Discord room, and see if that is not for you. And it's around emotional support for traders. All right, be well and have a great day. And thanks for coming to this space.
This has been the Wall Street Coach Podcast with Kim Ann Curtin. You can find out more about her and her team online at thewallstreetcoach.com. If you've enjoyed this podcast, please consider leaving a 5-star review on iTunes. Thank you for listening.